Hey guys, hope you are all surviving today, especially after that brutal blow during the last hour of trading. I mean, that drop even caught me by surprise due to the sheer magnitude. We are entering serious bearish territory with both stocks, and I have some things I want to clarify, reinforce and share with you. I do not know if you guys saw my Monday video and you stuck around to the technical analysis portion, but I warned you this was coming, and that the attacks were going to be incrementing. The aggressive expansion of hedge funds is indicative of the frustration they have been subjugated to for the past month or so. This video is going to be brief, but it will have some explanations as to what is going on with the prices of AMC and GameStop. Some of you might know these things already from your own research, but I would suggest you stick around for a broader explanation. Maybe there is something you might have missed. We are going to cover some important updates that took place today and then recap on the performance we saw from GME and AMC. Remember that all content discussed in this video is subject to my own opinion, and I am not a financial advisor. I simply do my own research and present the information to you guys with my own conclusions. As always, drop a like on this video to support the channel if you enjoy this video and found it helpful. With that said, let's just straight into it. Let's touch on some important news. NSC 008, the proposed rule that amended the clearing agency model risk framework, has become effective immediately. This is a great development and I am glad this one is officially active. I know there is a lot of frustration in the community regarding how these rules are not or might not be enforced, but the DTCC is not playing around as they have seen the ramifications of what is going to happen and are quickly moving to protect themselves both from financial destruction and a legal point. This might not be the biggest win, but it still counts. GameStop's Vice President Finance Jeremy Martin took to social media and said they are looking for finance leaders, fintech and buys to help build a commercial finance organization in a scrappy and disruptive environment. This little notice he posted seems to be directed towards the NFT team they are looking to build. This is a major catalyst to look forward and I could not be more excited. Another thing GameStop had released was that they were discussing a potential dividend on this stock, which would be an absolute home run for shareholders and an absolute nightmare scenario for hedge funds. There have been no updates on that for months and I do not want to hype anybody by making you think it will happen, but if it did, it would be a monumental victory. Huge shout out to Vestro for finding this vital piece of info. Let's discuss what has been happening this week, and why we seem to not be able to even properly consolidate. For veterans of these stocks, this is nothing new, but for the new guys, I know this comes as a surprise. It is unsettling for everyone, and frustrating for some. There have been many expectations that GameStop and AMC were going to squeeze around this summer, and the fact that we are now trading down is a big factor in causing some people to lose that enthusiasm that was so palpable just a couple of weeks ago. As such, let's have a cute little group therapy session. Let's begin with the most important trait you must have when trading AMC and GME, and that is shepherding your own expectations. Nobody knows when this will squeeze, and as much as people like to say squeeze next week or squeeze next month, nobody can really attest to that. I made a very big video this Monday which I recommend everyone to watch, where I explain in careful detail why I think inflation is the leading catalyst that could set off the squeeze, and that is fully dependent on a market crash happening as a result of it. People have predicted market crashes before, but no one has perfectly timed it. Do not be fooled by all the catchy thumbnails and emboldened captions putting timestamps on the mother of all squeezes, because the reality is that nobody knows. What we do know, with undeniable evidence, is that we own the float and many more times the amount of outstanding shares that are available for GameStop and AMC. Looking at some of the data that we have, bullish order flow is always many times higher than the selling order flow, which indicates more people are buying than selling, and there are other technical factors that point to the same conclusion. As such, people are currently wondering what happened. Why do we keep falling, especially with such vigor this week? The real answer is because hedge funds are in dire need to break these high levels of consolidation and support walls we have built for the last month or so. You see, hedge funds allowed AMC and GME to run, and yes, do not let anyone tell you we ran because we activate some type of trap card. We ran precisely because they allowed us to. The reason for this was because hedge funds sat thinking about ways to get people to sell, and they realized that when they keep suppressing the stock, it does not have any effect on consumer purchasing habits. People were buying the stocks regardless. So, they most likely proposed to let the stocks run a bit, with the intention of having people sell the stock at a high. However, the reality is that the percentage of people who sold was too minuscule. It wasn't enough for them to cover, not even close. As such, now they place themselves in a terrible position. They have 2 stocks which they participated in letting them run, and now they are sitting high and above because nobody sold at all. As such, they have had to come with a whole myriad of plans in order to try to get these stocks to not find a price floor at such high levels. This is when last week enters. They slowly start adjusting short attacks to prevent further testing of previous resistance lines. This alone sends the stock reeling back after small surges. They weaken the stock this way, because the attacks manifest itself both on the charts as well as on consumer psychology. With the price unable to move upwards, being cut short on every small attempt to run up and consolidate at higher levels, you make the stock move sideways with a small decline over time, which is what we see on the chart. This allows the stock to weaken over time, because huge dips are not really effective outside of weakening a certain support wall. So they did this to cause people to not put too much buying pressure, because as we have seen, when the stocks dip almost vertical, you see an influx of bullish orders coming in. By weakening it over time, people are more hesitant to buy. They also get a better feel and more control over the price action. Enter this week, and both AMC and GME are being hit hard. We aren't just seeing a decline in price, but we are seeing just nonsensical drops that we have experienced in months. They weakened AMC and GME enough to be able to relentlessly attack it, and the bullish orders are not enough to circumvent this. Why aren't they enough? Because they are rerouting buying orders through dark pools while letting sell orders go through regulated markets, which makes it seem as more people are selling than buying. They are spoofing in really big amounts, placing huge sell orders only to cancel them. They manipulate the prices like this. However, these 2 weeks, they have been using the infamous tactic of indirectly attacking the stocks by using ETFs. Today, almost every single ETF that carried GME alone was red. They are shorting indexes and ETFs that follow the stocks, in particular GME. I have seen some reports by some researchers indicate that they are particularly shorting an ETF called IWM to short GME, since there is reasonable evidence to suggest it carries a ton of AMC and GME shares. I did some research into this, and indeed it seems hedge funds are hitting this one really hard. They are going to have to cover for all the shorts they have placed on this ETF, but the damage will be done by then for AMC and GME, and the bounce will be easily subjugated and countered. Crazy stuff, trust me, I know. As I said on the Monday video, we are entering bearish territory, but we shouldn't scare off. In order to better cope with what we are about to experience, we have to reframe our minds. We have to refocus our attention into what is important. We know that dark pool trading volume has been increasing, and that there are more bullish orders than sell orders. As such, we can imply that the price drops on GameStop and AMC are not real, but rather an illusion to confuse the mind, create uncertainty and get people to sell and move on. That is precisely what they want. That is what they invest millions of dollars every year worth of research. They want you to panic sell. The only way you can survive this is by looking at the price merely as a reflection of a buying opportunity, and not indicative of the value of GameStop and AMC, because we know it is clearly not. By doing this, you detach your emotional attachment to the stocks and start thinking more rationally, which is the way we are going to win. Stay strong. Buy the dip and smile, because there is absolutely nothing they can do to stop the majority of people from leaving. The Fed submitted over $859 billion worth of reverse repo operations today, a huge jump from yesterday. Dark pool trading for AMC accounted for 64% of all the volume the stock had today, while dark pool trading for GME accounted for 48% of all the volume today. Data shows AMC had almost twice the amount of buy orders that it had for selling, a very positive statistic. GameStop was even better, having over 3 times the amount of buy orders over sell orders. Let's wrap up the video with some technical analysis. AMC had a pretty bullish pre-market, to be honest. The stock moved up and then retraced a bit at a higher level of support right on the VWAP line before running right to the previous resistance before the market opened, which is when things got nasty. We had the typical drop we have seen, but this time the rebound wasn't there. We experienced a small bounce to the VWAP but started falling again, which indicated to me that today was indeed going to be brutal. We retested the lower band of the VWAP before another bounce up only to fall yet again. The stock had a bit of a respite around noon, before running past the VWAP on a surge. However, this victory was short-lived, as we once again fell. During the last hour of trading, AMC had a very brutal fall, closing at 33.43. The stock, however, kept falling right after the market closed, showing the veracity of the attack. There is no way around this. Hedge funds are going to try to dip this below $30 by Friday. Depending on when they stop shorting ETFs, in particular IWM, we will see a bit of a bounce up, but even then, that will be short-lived. The momentum is on their side and they will not take the gloves out of our face. We finished well below the VWAP, way oversold, but that should not matter as any bounce up is really up to hedge funds and not a result of technical factors. We are not trading a stock that behaves normally, so we must adapt and be comfortable with uncertainty. GameStop had a bullish pre-market as well. The stock opened and had a lot of volatility. Around an hour after the market opened, the stock started showing significant weakness, continuously falling below small but consolidated support. GME consolidated again around 1 p.m. before breaking resistance and running into an ascending triangle pattern. The stock broke support on that and over time it started falling. The stock had entered a falling wedge and fell to retouch the bottom of it at 165.28. It had a small and honestly insignificant bounce to close at 167.62. I think hedge funds will try to get this below 165 by Friday. We ended well below the VWAP as well, and my outlook on this is just the same as on AMC. The hedge funds are the captain once again and in full control. Forget about daily progress because we aren't here for that. We are here for a squeeze, so don't hyperfocus on daily gains. Buy the dip if you can and hold on for dear life. I have been laughing throughout the day watching both stocks. It's hilarious the length that Wall Street goes to try to get me to panic. I cannot wait to get my next paycheck and buy some extra shares at a great discount. Honestly, if hedge funds could get GME below 150 and AMC below 25, I would be ecstatic. I want to buy a ton more before the next surge, or even better, before the squeeze. With that, let me know in the comments how you feel about all of this. Today's big question is, do you think school in our early years prepares us to cope with life? Do you think we are given the right tools to be able to figure things out for ourselves? Very curious. I will post my answer below in the comments. Thank you all for making it to the end of the video. I hope to see you all tomorrow on the next one. Big shout out to my Patreons and one-time donators for keeping this channel alive. And with that, I will see you on the next one.